The invite's out. You guys do your part as well. Of course, if you're joining on the replay, you can fast forward. Past the disclaimers, we're going to wait for the studio audience to come in. While we do that, I'm going to save some time for you newbies coming in, for you checking this out on the replay. I'm Money Mark. This is not a big production, but it is a big production because unlike the 10,000 clowns out there that make themselves look like the greatest thing since sliced bread, I am a retired multimillionaire, multi-decade Wall Street analyst who sold stock picks to guys like Jim Cramer. I'm a guy that went from the absolute basement, literally living in a basement, not a basement apartment, to a penthouse in Miami Beach, making 7 figures a year on stocks, 30-year track record of well over 40% annualized returns. So I'm the guy that tells you CNBC is full of you-know-what, that colleges are full of you-know-what, and the 10,000 clowns out there giving you a new pick every single day is full of you-know-what, because after 30 years, I can tell you with certainty, there is absolutely no way I could give you a new pick, one pick, every day, much less 3, 4, 5. You just can't do it. All right? I spend 100 hours on every pick, minimum. That's why I have no losing picks in my official portfolio since May of last year. Okay? I'm going to check the attendance numbers. If you veterans have done your job, and I know a lot of you haven't, there's 500 of you in my inner circle, and there's only 100 retweets. That tells me there should only be 100 of you in my inner circle. Okay? So stay tuned, because I haven't done a purge in a long time, and Coach A-hole feels like being an a-hole. All right? I haven't had many dummies to yell at recently. So salute to y'all. Salute to you guys for not being stupid, not being morons on this show. Finally getting it. Let's validate and verify. We got the audio, we got the video, we got the numbers coming in. Just about the numbers I want to see. But you veterans not sharing the invite hurts, right? We start the show late. You know I'm prone to just saying, screw it, I'll go to the beach this week. I might do that. But rather than penalize everybody else, I'm going to penalize y'all. I am going to have a purge soon from the inner circle, and you guys are going to suffer. That's all there is to it. In the meantime, for the rest of y'all, it's Friday, it's Money Mark, and it's Stock Talk Live, another big show. What did I tell y'all a couple weeks ago? A few weeks ago, I named Gatekeeper my largest position. It's still my largest position, and the stock just keeps running. Why? We're going to talk about it in depth in this show. But first, I have to put this on the screen to let y'all know that this is a complete clown show. Everything I'm doing is a parody and a joke of Wall Street, CNBC, and all that. This doesn't mean anything. I can enter, exit, reverse positions at any time, no matter what I say, and that you guys accept that I can pump in your faces, dump in your faces, and you're happy that I'm doing it because you enjoy it. Whatever other CYA I have to put out there to actually provide you guys with this service without fearing reprisals from the authorities that be. So, if you are watching this show, if you are listening to this show, you acknowledge that you have either read or had this read to you, what is on the screen right now, and fully accept responsibility for anything to do with the content of this show. I don't know, is that enough? I think that's enough. Tilly Norwood, she's pretty hot. You'll never have a date with her because she's not real. But she is one of the hottest actresses in Hollywood this week. We're going to talk about that a little bit. This is, for those of you who don't know, I have plenty of information in the description of this video. to help you understand what I'm going to say here, because I do not talk like the other 10,000 clowns out there. I talk like a Wall Street professional because that's where I came from. I'm not going to put up with any BS. I'm not going to give you any BS. I tell it like it is. So a lot of times y'all don't like it. You don't like when I get bearish on a name or tell you that it's gone too far. I'm the one that gives you these names. I gave you TSSI at 2. I told you TSSI was overvalued at 20. It went down to 11. I told you TSSI could have a really strong Q3 and Q4, and they still could and should, right? To make it a good trading vehicle for the time being. And sure enough, you see the stock rebounding greatly from 11 to wherever it is now. Okay, I'm here to tell you the truth no matter what the truth is. Good, bad, or ugly. I'm not here to support your names or my names. I'm here to support the truth, because the truth is what makes us money. If I need to get rid of a name like AMPL last week, I'm going to do it. I'm going to tell you this no longer fits within my rule set. This is no longer a 10 situation. We want 10 situations, not tense situations, 10 situations. Those 10s are what make the millions, that keep the millions flowing, that get you to your first million. And once you get to that first million, if you continue to make 40% a year as I have over the years, the million becomes 2 million in just 2 years. The 2 million becomes 4 million in just 2 more years. Now you're making $1 million a year. Like moi. It's not that hard, okay? I can tell you from experience, because I was a loser in the early 90s, losing money every single year, day trading stocks, until my mentor showed me the light. And then I became an expert on technology through technology firms, went through the internet bubble, was hired by Jim Cramer's firms, George Soros, and if you watch the movie Dumb Money, Stevie Cohen. And here we are. So enough talk. Let's get into it. The description of the video will tell you all you need to know about who I am, what you need to know, how to understand the lingo that I'm going to give you on this show. These are the channels that I am on, so you can pause this later and find it yourself. Okay? 3 things I give you that most of the 10,000 clowns don't. My real name, my real credentials, which are on this page, and a real-time tracker of all my picks going back to 2014, which, by the way, was after I left Seeking Alpha. And during the 5 years prior to this spreadsheet, I picked 24 triples for Seeking Alpha in a 5-year period. That is also documented. And as far as how we've been doing great. No losing picks since May of last year. There you go. 48.6% annualized return going back to 2014. That's over 10 years for those of you who counted at home. And that's enough patting myself on the back. Let's get to, this is, by the way, you should read this. You should watch this, Making Millions with Mark. It's on my homepage. And that's what will get you up to speed on everything you need to know about what I'm doing and how I became a millionaire and how you can follow suit. On the macro side, we're not going to spend much time, except for the fact that anybody who asked me, Mark, what about the government shutdown? I don't remember seeing anything in my notebook about what to do if there is the threat of a government shutdown. It's not in the rules. Just follow the rules. Just, meaning only, follow, meaning follow the rules, meaning the rules. Okay? We work off of risk reward. These risk reward charts tell you pretty much all you need to know. CNBC just wants you to keep watching the show, so they trick you into thinking things are important. I had a friend who's been following my systems for the last, 4-6 years, bro? Called me up and said, Mark, what about the government shutdowns? What about them, bro? Ignore, ignore, ignore. And what do we have? Market up. Market up. I think I should sell some of my stocks. Go ahead. Go ahead and sell some of your stocks and see what happens. Lose money. Miss out on profits. And that's what ends up happening when you watch CNBC and get fooled into doing the wrong thing, because that's what they do. They trick you into thinking, I should be long, I should be short, I should be long, I should be short. Many times all day, every day. So you could keep watching, so you could keep getting those advertisements in your face. because that's how they make money. Okay? If you hear the crying sound in the background, it's apropos. All right. Let's get back to it. I don't have anything else to say about macro because everything's pretty much the same as it's been, right? The actual data is deteriorating or weak slightly. Nothing to be overly concerned about. Fear greed index is neutral. The interest rates have been falling, which all else being equal is positive, which brings us back to the most important thing, which is risk reward. Okay? And from that perspective, we've already been in yellow alert. The Qs in yellow alert. The S&P 500 in yellow alert. Let me look at this chart going way back. Okay? This goes back to the 60s. And you can see how the market has acted over the years since the 60s. Every time we get to this red line, it's eventually trouble. Even back here, it took 5 years, but the market came all the way back. You could have put your money in some safe money market or some bonds or whatever, and over that 5-year period, made yourself maybe 25, 30%. In stocks, 0. Because people were paying too much for stocks. Don't do that. But at the same time, keep in mind, there are always, the one thing Jim Cramer is maybe right about is that there's always a bull market somewhere. And that's what we focus on. All right? We want to find the individual stocks that aren't in red, yellow, or orange alert territory. The market is. I don't want my money in the general market. I don't own market ETFs. In fact, I am short some market ETFs against my long positions, which I continue to buy and continue to own because we are in a great market right now. Until further notice, it's just more risky. And that's why last week, one of the first questions, and by the way, if you have a question, put it in the queue. I will be answering questions until 3:55 p.m. Every question that comes in, put a question mark at the beginning of your question, not the end. It's easier for me to see. Other than that, I love all the comments, so put your comments in there. Give me the thumbs up. Yes, I'm not going to ask you to hit the subscribe button. That's up to you, but the thumbs up helps to spread the word. And I never charge anything. There's no subscriptions. There's no advertisements. There's no sponsorship. Any advertisements you see on the show, it's YouTube. It's not me. I turned off monetization. They asked me to monetize this channel. I said no. I don't want to accept money for anything. My mentor trained me to be a millionaire for free, and now I'm doing that to you for free. I'm not going to take any dough. So, but I will ask you to spread the word. Let people know that there's somebody here doing this for y'all. The thumbs up helps does that. The comments in the section do that. Do not be a troll. I will ban you from my channel just like that. Sorry, mommy and daddy didn't give you love. I'm not going to do it either. I feel sorry for you, but bye-bye. And don't pimp your own stocks. It's my channel, not yours. Go start your own channel. Other than that, ask me any questions. Give me any comments. I love them. I read every single one of them every single week. Constructora, you know that. Let's keep going. You guys came here to hear about stocks, not hear me babble. So let's get to it. So, where do we go from here? Good question. Because increasingly, right, and this article right here from Fabricated Knowledge, Doug O'Loughlin does a pretty good job, is the latest in a long or a growing string of people out there talking about this being a bubble. Not CNBC, F them. Those aren't real professionals. There's very few people that show up on CNBC that are true professionals, people that I respect. There are a few. Right? A lot of my old friends, old customers out on CNBC, but they're in the minority. 99% of those guys are clowns. All right? The real deal people out there that really understand what is going on with AI, more and more of them are starting to feel like we're going into a bubble. And guess what? So do I. I said no. Until when? A few weeks ago when Oracle made that big move, right? And I said, no, I've been following Oracle forever. I used to be one of the axes on Oracle. I used to call their quarter for Wall Street. I used to tell Wall Street analysts how to call Oracle's quarter for their clients. I know this company. And there's no way this stock belongs above the red line. The last time that happened was the internet what? Bubble. And so there is a chance that we are now forming an AI bubble. And sure enough, I told y'all, you do not want to chase this move on Oracle. The stock belongs closer to the red line. And what has it done since then? Moved closer to the red line. We were up here. And what's that? An 18% drop for a mega cap like Oracle. That's a massive drop. Thank you very much. I nearly tripled my money on my put options on that stock. I think you can still count on it continuing to drift lower towards the red line, 263 at a minimum. That's a 7% drop. I do not want to own Oracle here. I don't want to short Oracle here either, because a 7% drop, what if I'm wrong? And it gets another pop. The low-hanging fruit has been made. We got 18 out of 25%. Move on. I love hitting doubles off the wall. If every player hit doubles off the wall, you're scoring tons of runs instead of swinging for home runs. Don't do that. You don't need to. All right? You don't need to gamble to make millions. It's calculated risks. So boom, there's that. At the same time, we continue to see the same BS that we saw back in the day when I told you AI is not a bubble. Back in the day when I told you NVIDIA is not a bubble. Back when everybody else, not everybody else, there were a lot of people out there saying, NVIDIA is doing these dumb deals with CoreWeave and it's a circular jerk and it's just bull. This is a fraud. How's that looking now? At 42, I remember. At 42. What is it now? I don't even look at NVIDIA on a daily basis. 186. At 42, I was telling you that's BS. Don't listen to the BS. Right? And even to this day, we continue to have what? The false narratives about NVIDIA, DeepSeek, Alibaba. When will people learn? Anybody that cannot tell you the difference between LLMs and inference, just stop them right there. You don't even know, you need to know what it means. But if you ask them, what's the difference between building an LLM and doing inference? And if they can't answer that question, move on, okay? Because we have in this situation the build out, the hyperscale is building out these AI data centers, okay? And there is nobody that can match NVIDIA still to this day. As I told you 2 years ago, that nobody was going to be able to touch them until further notice, and it's still until further notice. I don't see anybody even closing the gap on NVIDIA when it comes to these large language models. The infrastructure for these data centers is too intricate. It's not about a GPU. It's about the entire ecosystem, from the GPU to the HBM to the hard disk drives to the networking equipment to the cooling, VRT. Everything that goes into that data center where the GPU is just the heart. Okay? And yeah, the heart is important because the rest doesn't work without it, but if you got a crappy body around a good heart, you still aren't going to survive very long. And NVIDIA has the whole kit and caboodle, including the software. Nobody comes close. So let's leave it at that. You can look up Dr. Castellano's article about this if you'd like. But I just wanted to reiterate that once again for those who don't know, or didn't hear it, or didn't write it down, the two most important tools, best investments you can make. $1 notebook, $1 pen, write things down. The brain is not a memory. It is a processor, okay? It's not made for memory, it's made for processing. Who's this? Cute little girl. Too young for me, but maybe not y'all. Hollywood's newest actress. And she's AI generated. Let's see if you guys can hear this. Let's see, we'll turn it up.
Is Tilly Norwood.
Let's get to know each other, and thanks for watching.
Her photos and videos are all over social media, but Tilly is already causing a major controversy. Why? Because she's not real.
Crazy, right?
She's AI generated.
Tilly Norwood.
This girl is going to be, I can almost guarantee it, be in a movie. I've made calls. I told y'all 2 years ago we're eventually going to get an AI generated Avengers movie, right? I told you we were going to get AI generated movies. It's already happening, right? February 2026. What's that? 5 months away. AI generated movie coming out. Okay? OpenAI working on an AI generated movie. Now we have AI generated superstars. Tilly Norwood, basically now the first official AI superstar. Hollywood is pooping their pants because if this girl, this girl right here is already a more famous actress than 90% of all actors and actresses in Hollywood. Fact. And this is what's happening. And this is what I told you. And this is really important, right? We're not here to talk about Tilly Norwood. We're here to talk about what this is going to mean for companies like Netflix, Disney, Google, etc. The list will go on. You guys can chat about it, right? But what happens in a world where the actors and actresses can be generated by AI? By a computer. This is why OpenAI is making a movie, by the way. That's the primary reason. Not because they want to get into the movie business, and maybe they do. But I think more than anything, they want to showcase the capabilities of their software so that they can be the AI that gets used to make movies by companies like Netflix and Disney and maybe even Google. Why Google? Simple. You've got YouTube TV and you've got YouTube. YouTube has way more followers, way more people on YouTube than even Netflix. Okay? So when you have distribution, right? It's easy for these companies to put content in front of us and get it out to millions of people, which is what you need to justify the cost of making a movie, is distribution. Well, who are the kings of distribution? The likes of Google, Netflix, and Disney. And if you look at Disney in particular, who hired Chris Hemsworth to become Thor in the first Thor movie several years ago, they paid him $100,000. They got away with that because he was just a soap opera actor in Australia. Okay? They made him a superstar. They could have made some AI a superstar. They couldn't because the technology wasn't there back then. It's really not quite there yet, but almost. You see what we got here. But if they did that, they would save themselves the hassle of having to pay Chris Hemsworth, not $100,000, but now $20 million per movie. That's what he gets now. So Disney made Chris Hemsworth a superstar, but now they have to pay him like a superstar. I don't think Disney thinks that's a great business model, do you? So why don't we just create our superstars in the future out of software? It's basically an extension of animation, right? It's animation to the extreme. It's animation so realistic that it actually looks and feels like a real person, real acting. Pixar does it, right? Why not extend that to the human genre? Hollywood doesn't like it. I'm sorry. I don't think they can stop it, quite honestly, because I don't see how Disney and Google and Netflix, yeah, they can go on strike. It's going to be a fight. They're going to fight for them lives. But at the end of the day, this is what's going to happen. And it may end up being a disruptor that comes in. A company that doesn't need actors at all. Right? Because Disney needs its actors. If the actors go on strike, we won't have the next Avengers movie, the next Fantastic movie, et cetera, unless they go full AI immediately. And I don't think they can pull that off quite yet. So in that gray area, they still need the actors, and the actors are going to want something for that. Right? But what if somebody comes out of nowhere, out of left field, producing movies AI from scratch? Not needing actors at all from scratch. Well, they're going to be a disruptor. Stay tuned. Keep an eye out for that. Okay? So get your mind running on what this all means. And by the way, we're going to see this disrupting the likes of Meta, Snap, TikTok, because AI is now going to generate posts as well, right? You got zillions of kids out there just looking for the ultimate place to make their next post, right? An extreme post. I'm on a Ferris wheel. I'm on a roller coaster. I'm on Mars. Well, now you can be on Mars because the AI is allowing it. You're seeing OpenAI enabling this, right? So we're going to see the posts on social media bounded only by the imagination of the users out there. It's going to change everything. So keep your mind open, keep your eyes open, and be careful about overpaying for some of these stocks. When you get to the top of the risk reward line for some of these stocks, that means there's more risk than possible reward. And you don't want to be there when lightning strikes and all of a sudden a company becomes irrelevant. I remember when that happened with Chegg, because ChatGPT made it so you can learn off of AI. Well, guess what? You didn't need Chegg anymore. And that stock got absolutely smoked. Since the release of ChatGPT, right about here, Chegg dropped 98%. Bounced back, dead cat bounce, I don't know, we'll look into it. But in the meantime, I don't see this company regaining its past value. This was a $100 stock a few years ago. Now it's $1. This is what can happen to your stock if you're not careful about keeping up on what's happening in this space. So I'm going to keep you up to date on what's happening in this space. Questions, put it in the queue. Let's move on with the show. I've got a number of slides to show you. I've got some names to talk about. Oh, by the way, before we move on, one name that comes to mind, right? Now that we're seeing an AI superstar actress, now that we see movies on the docket for early next year to come out, AI movies, what we're going to see is a continued groundswell around the hyperscalers, the OpenAIs of the world, continuing to make their models better and better and better at generating video. All right? And the way that you do that is you feed existing video into these models. And then the AI learns from those models. Oh, that's what a good actor looks like. That's what a good actress looks like. That's how a good actor acts. That's how a good actress reacts to something that a good actor says, and starts picking up on all of that human acting stuff, right? So where are they getting all that video content from? Well, obviously the video content producers. A company like CuriosityStream that has a huge library of content licensed their content to those companies. But not only that, they didn't stop there. They injected themselves. Once they figured out the process, they went through the whole process. Like, how much should we get paid? What does a contract look like? What should the duration be? Get all the lawyers involved and go through that whole process, right? And at the end, the hyperscalers and CuriosityStream both said, wow, that's a heck of a process to go through. And CuriosityStream said, we don't want to let that go to waste because now we have experience doing it. And the hyperscalers said, we don't want to do this from scratch every time with every new content provider. And so CuriosityStream said, we've got the perfect solution. We know how to go through the process, so we'll go through the process for you. And then you just sign the deals with us, and it'll be a lot easier because we already know the process. And the hyperscaler said, that's a great idea. You guys go ahead and become the agent, the middleman to get these content deals out there. So I am involved with CuriosityStream, not an official pick, but I've owned the stock. It is one of my largest positions. Remember what I told you when the stock, let's zoom in on the chart. Okay, we get a nice little zoom in there. And you see these lines being, of course, technical. You guys know the difference between technical and fundamental lines. The fundamental being the most important, the red and the green. If you haven't watched the video or read my article like I told you to, this and that, Do that over the weekend so you understand what I'm talking about when I say white lines, red lines, and green lines. But these are white lines, they're technical. And when we had a breach of this downtrend on a stock that we fundamentally like, that was the signal to buy in. And the stock has done really well since then, rising about 20% off of that break. I feel like this should continue. Still working on what the ultimate valuation should be. But in the interim, we definitely know that we've got a groundswell of demand and interest in content being generated by AI, which means the LLMs are going to have to get better and better at producing it. Okay, so that's why I like CURI, Curiosity Stream. So that takes care of that. Let's see. We talked about AMPL. We can do that real quick. Boom, you see, when I told y'all, when I took it off my official list, right, the stock was down like 1.8% that day, right? So you had plenty of time to react. Since that day, it's down even further. Here's the one I'm going to tell you. I can't always tell you the whole story, all right? I do my absolute best to not come in contact with insider information, so I generally don't. I almost never get insider information. That's great. If I do, it's a problem because all of a sudden now I have insider information. I can't buy the stock. I can't sell the stock. I can't tell you to buy the stock. I can't tell you to sell the stock. So when I'm talking to my contacts around the world, I make sure they know, do not tell me anything that fits this description. I don't want it. I don't even want anything that you might consider gray area because it might be red. And then that puts me in a tough situation. So, but let's put that aside. So that's easy, right? Money Mark doesn't deal with insider information at all. But I do deal with information that is considered sensitive. What is sensitive? Well, it's not insider. It's not illegal. But it's information that maybe if it gets out into the open, there's maybe only a few people that know that information inside of a company. And even though it's not insider information, the company would prefer that it not be shared. That happens all the time, okay? On Wall Street, you always see like emails, internal emails get shared with Wall Street analysts. Happens all the time, right? When things like that happen, those Wall Street analysts will go out of their way to protect the source. They don't want to, imagine if, right, I'm a Wall Street analyst, I'm getting these emails from different sources at different companies all the time. Let's say it's Oracle, right? And I've got a contact at Oracle that sends me these emails. They're not insider information, but it's good insight into what's going on within the organization, right? And if I share that email, right, Oracle, inside of Oracle, they might say, who shared this email? And they can start keeping track of the emails that they send out and who that email went to. And eventually, if I'm sharing email, they might be able to narrow down, even trap. I know how to do this, right? A person and figuring out who it is that's sharing information they're not supposed to. I used to do that in my business. Because in my business, you're not supposed to share the information I sell to you with anybody else. Part of my value proposition was the information was semi-exclusive. I only sold it to 15 customers. It's not supposed to go to 50. So if you share my information, I'm going to find out and I'm going to kick you out and I'm going to keep your money. And I've done that. My customers loved when I did that. Well, my honest customers, my dishonest customers hated it. They yelled and screamed. I said, look at the contract. F you. Bye-bye. Thank you for the money. Good luck in your next life. Right? There's ways of trapping people. And you don't want to get your contacts trapped because then they won't trust you with their information anymore. So, all that to say, I'm not telling you that that's what happened here. I'm giving you an example of insider information, non-insider information that cannot be shared. Neither one can be shared. Right? So, I don't give you the whole story all the time. So a lot of y'all ask, man, why did you get rid of AMPL? Well, there's a number of reasons, okay? Not the least of which was we've seen, look at IWM, just in the last few months, getting closer and closer to the red line. The closer we get to the red line on more indices, look, we've already got the Qs past the red line. What's going on here? Where are my red line? There you go. The Qs are past the red line. The S&P 500 is past the red line. I told you that IWM is the last bastion of value out there. Back when it was down here. And since then, it has also made progress up 15% in 2 months towards the red line. And as that happens, we have to get more and more and more picky. A lot of you make the opposite mistake. You get more and more and more cocky. The market's going up. I can't lose. Every pick I'm making is winning. Sound familiar? The difference is I'm a professional that's been doing this for 30 years. I do this all day, every day. All right? And I know enough to get more picky as we get closer to the top line, not less. So be careful. Don't jump into every story that you hear out there. Because more and more, I'm finding the stories that I'm being told are BS. I gave y'all one last week. I forgot which one it was. And I was like, man, I can't believe this company has such a huge market cap when it's actually a BS company. And sure enough, on Monday, somebody came out, and you can put it in the chat if you guys know which stock I'm talking about. What is it? Something Panda came out with a bear report on that same stock I told you about on Friday to stay away from. Why? Because I do the research. I look into these things. Well, they hired somebody from Microsoft. Who cares who they hired? I'm doing the research, and it's coming up red flags. Yes, they made a nice hire from Microsoft. In fact, maybe that hire from Microsoft was the smokescreen for the BS that they're trying to pull. You know what I'm saying? You don't know unless you know. And how are you going to know if this isn't what you do for a living? You might be the best mechanic, the best surgeon. You might be the best rocket scientist out there. And if you are, you definitely know more than me about those 3 things. But guess what, Jack? I know more about this than you. That's what I'm here for. That's what you're listening for. So be careful. Resolve. RZLV. Yes, sir. Jello. Thank you, my friend. ZLV. That's, once again, Jello coming through. Jello, what a superstar. Yeah, Rob, absolutely. BS. And what's really funny about it is that bear report came out. What was it? Let's see. The last show was September 26th. So September 26th, I give you the, and then the bear report comes out and the stock bottoms out. This stock was down in 5 trading days. It was down 30%. Now, I don't know if I said on the show, but I definitely said to somebody, if not an audience, be careful, because when they announce earnings, this is when a BS company fights back, right? BS companies are going to BS. And sure enough, that's what they did. They BS'd on their earnings call, and the stock pops again. And by the way, right, you didn't want to chase this move all the way down, right? You saw that? That's a big move down on a chart like this, right? Because we could draw some lines. Boom. I'm not going to spend too much time because they don't deserve it. But you can draw some lines and say, look at that. That appears to be the technical channel in which this stock is moving, right? And it went all the way up to here. This is, if you're going to short a stock, this is where you want to do it, all right? And if you're going to cover a name, this is where you want to do it. Or if you want to buy a name, that's where you want to do it. You definitely don't want to be shorting here after it was up here. And sure enough, this is where they fought back. The stock's fighting back. If it gets up to these levels, then yeah, maybe you want to think about shorting it, right? I don't do too many shorts these days because these companies are really good at fighting back. They're tricky, right? So be careful about that. Boom. Let's continue. Now let's get into Gatekeeper. All right. Boom. What did I tell y'all? Over the summer, the early summer, GKPRF, right? Early summer, where every single week it seemed like they were announcing another deal and another deal and another deal. Let me see. Press releases. I mean, it's been absolutely crazy since May. I'm not going to even have to hit the older entries. Virginia, Florida, Missouri, Nebraska, California, Oregon. All these deals. They had, I think, 7 deals they announced in 6 weeks. And then it got quiet for a few weeks. And then they announced a massive, right? I mean, you had this $1 million deal that came in. That's pretty big for them. A company that only does $30 million a year, $1 million is a good chunk of change. But then right on the heels of that, $27 million, almost a whole year worth of revenue in one deal. Okay? And the stock did this over this time frame. Okay? Then it consolidates, takes a little breather, breaks out of the consolidation pattern, and now, boom. Now this company is not just announcing these smaller $500,000, $1 million deals. They're announcing $10, $20 million deals. This is what I told you would happen as we have these federal mandates in the US and Canada. There, by my reckoning, are billions of dollars worth of business that's going to be done in this space over the next 2 years. And then a long tail beyond that. Because once this video camera monitoring infrastructure is in place, now you can start to layer on AI monitoring services that you can charge monthly subscription fees for. And the margins on those are massive, way more than the cameras. This was a nice camera business growing year after year, but now it's an AI services business that's growing year after year, because for every one of those cameras out there, there's video content going into their back-end servers that they're increasingly adding AI to, so you can do things like determining who is breaking the law outside of the bus. Stop arm violation. You know the stop arm? You're not supposed to go past the stop arm. Kids get killed that way. Automated issuance of tickets. That's a big, huge business. $250 million business in New York City alone. Okay? End-to-end monitoring of your children. From the minute they leave the school to the minute they get home, from the minute they leave home to the minute they get to school, the AI keeping an eye on them. Right? Keeping an eye on the bus itself. Are there fights happening on the bus? My imagination cannot fathom the various services that they're going to be able to layer on. It's like inventing Nintendo and then seeing all the video game creators come out and build video games for that hardware. That's what we're going to see here. Once the hardware is in place, you can see tons of services layered on top of that, which creates a long tail of high margin revenue for Gatekeeper. Now, with all this news, okay, I'm trying to figure out how much business could there be out there, how much market share they're gaining, and all of the results came back positive. In particular, in the school buses, they seem to be winning like every single deal. Okay? And when you look at that $20 million deal that they got from Long Island is just 1/8 of New York. Okay? And New York, the MTA, as you see here, only accounts for about 7.4 of all revenue across all public transit. So Long Island only represents roughly 1% of the opportunity out there. That makes sense, because no matter how I slice it, I keep coming up with a number of around $2 billion opportunity out there to be had. And when you do the math on 20 million being 1% of the total opportunity, that's 2 billion. All right. So there's multiple ways I've done this. I've run this through AI a bunch of different ways. What I also did was, and I'm not going to go over it too much because I wrote this 2 articles this week. Okay. The first article was this one right here about the California contract and how I used AI to try to figure out which city it's with, which partner it's with. We don't know because they haven't announced it, but it feels like LA because of the size of the deal. The AI said it's either LA or San Diego, most likely, and it's either First Student or Zoom, most likely. Okay, so let's break that down. First of all, from the city perspective, San Diego is not doing business with either of those partners right now. So San Diego is out, which means I'm almost sure that it's LA. Okay, that's huge because that means they have now secured business with New York, LA, Philadelphia, Toronto. That's 4 of the top 6. Okay, who do you think the other 2 are going to go with? Same story I told you before when they had 3 of the top 6. And I said, it shouldn't be, like ultimately they should win LA, Chicago, New Jersey, Ontario, etc. And we're seeing it happen. Okay. So we had that. The fact that they're partnering. Now, whether the partner is Zoom or First Student, I don't think really matters because the latter has a valuation of $4 billion. They could acquire Gatekeeper with pocket change. Okay? They're the big kahuna. Zoom has a market cap valuation of about $1.4 billion from their last round of funding. $350 million, I think, round of funding for Zoom. They, while not as large as First Student, is considered the disruptor in the space. In fact, they have been on 3 of the last 5 CNBC Disruptor 50 lists. So basically every other year, they're making it on the CNBC 50 Disruptor list. Okay? Either one of those is great news, and it doesn't seem like their partner in this deal is anybody except one of those 2. So that's huge because now they start to get designed into future deals. They get brought into more and more deals. Okay, it's and if you look at, so you can read those articles on the site. Okay, one I missed, so we'll come back to that. And you see Zoom back a few years ago awarded a $400 million contract. This is the kind of deals, right? And Zoom and Gatekeeper, First Student and Gatekeeper, these guys are perfectly complementary organizations. All right. So this is great news because as we start to see the deals start to occur in this marketplace, you're going to see partnerships forming like Kuretsus, if you know what that is in Japan, right? Where you're going to have the train manufacturer and the hardware supplier and the software supplier all come as like a package deal. And increasingly, I'm hearing that the buses and the trains are going to come preloaded or pre-wired for this equipment to go into it. And so all of a sudden, if you become the vendor of choice from that top level down, you're going for the ride, and it seems like that's what's happening here. Okay, what else is nice about this? I'm going to go back to my website for a second because the other article I put out was regard to bus patrol, and I'm going to have y'all read it yourselves because for the sake of time. Right? We want to get as many questions as possible. If you want to learn about it, go read the article. I'm not trying to push you to my site and it's advertisement. Sorry. I'm not going to pay to have advertisements removed. Right? I'm doing this for free. I don't get paid for this advertisement. WordPress does. Whatever. Anyways, here, Bus Patrol. Scandal. At the biggest, the most disruptive vendor in the space. This company has been a thorn in Gatekeeper's side because Gatekeeper, smartly, charges for their equipment. Okay? They say, look, you want to make money charging people tickets, giving out tickets for stop arm violations? Cool. Buy our equipment and you can do that. We'll take a small cut or something. What Bus Patrol does is they say, we'll give you the equipment and take a large cut. That's problematic. They should have known this from the start. The cities, that is. Not Bus Patrol. It's genius for Bus Patrol because they put the cameras on the buses, right? And then what do? They issue tickets to anybody and everybody for anything. Who cares? If it's questionable, give them a ticket because we don't have to clean up the mess. We don't have to handle the appeals process. We just collect our 70% on every ticket, which we need to do because we just gave away all that equipment, millions and millions and millions of dollars of equipment that we paid for up front. With what money? Money that they borrow or get from shareholders that aren't going to be too happy to find out, like what happened in Miami, that Miami shut the program down. So after all that money, all that upfront investment in setting up this whole infrastructure to issue tickets, it was such a mess that Bus Patrol created for Miami that Miami said, stop, no tickets until we figure out what to do about this. And then they find out that there was circumvention of the bidding process. In other words, Gatekeeper wasn't given a fair chance to win that deal. Well, what do you think is going to happen now? Now it's a big scandal in the city. Maybe they go back and say, you know what? These guys are a scam. Kick them out. Let's redo. And maybe they bring in Gatekeeper. This is the best thing that could happen to Gatekeeper, because Gatekeeper wasn't losing all deals to Bus Patrol, but they were losing deals to Bus Patrol. There's always competition in a marketplace, and Bus Patrol is one of the competitors. Well, guess what? Bus Patrol, the competitor, just broke their leg. One less bit of competition, a big chunk of competition, by the way, that probably now has a very difficult time going in and offering that same freebie deal. Now that Gatekeeper can go in and say, are you sure you want to do business with Bus Patrol? You don't think that word is spreading throughout the entire US and Canada about what Bus Patrol has been doing? And that city officials are now saying, man, I don't want the scandal that's going on in Miami. Screw these guys. We're going to do a normal bidding process, and let's go check out, let's bring Gatekeeper in and see if we want to do business with them. This is great news for them. You can read the rest of the information about that in that article. Let's continue on what we got going on here. This is huge. This was great. This was on Stockhouse. Rogers Bull, salute to you for putting this together. This is really nice work, right? Not hard work, but nice work. Because what we have here is since May 1st, May, June, July, August, September, 5 months. In just 5 months, this company, Gatekeeper, has signed 45 million, I'm talking Canadian dollars because they report in Canadian dollars, $45 million of contracts in 5 months. 45 million divided by 5 is 9 million per month. Multiplied by 12 months in a year, that's $108 million. That's the run rate that they're on from the deals they're signing up. I told you that these guys' revenue could multiply. And what you're seeing now is a company with 30 million of annual revenue now on a 108 million run rate. In just 5 months, they have one business representing 1.5 times their annual revenue in just 5 months. For a full year pace, if they continue this pace, and the CEO has already publicly stated that he has a $70 million deal in his pipeline and a $100 million deal in his pipeline. If he wins one of them, even if he wins the smaller one, that's $70 million. That dwarfs all of this. Okay? That's 2 years worth of revenue in one deal. Never mind if he wins both. Okay? That's the kind of business that's flowing in right now for these guys. Great work, Rogers Bull. Love that. That I've already talked about in terms of 260 million, those violations that get automatically issued. We'll talk about Sinestech in a minute. As far as the chart goes, you see it's marching up. Do not be afraid of this chart, because just to get to this red line, you're talking about 31%. What you guys might remember, Drone Shield, what happened to them? Blasted right through the top. That's the kind of market that we're in right now. Okay? When a market suddenly finds a groundswell of demand, okay? Drone Shield's been growing for years now. Defense against drones has been a thing for many years. But this year, it moved front and center. Ukraine war, drones everywhere, And all of a sudden, everybody around the world is like, whoa, 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 this is real. This isn't just a little problem. This is a huge problem. And we picked Drone Shield down at these lows, near the lows. The stock tripled plus, I don't know, let's see. What did it do? It was in the unofficial list. We got 218%. And I got out right about here. And it just kept going. The stock is up another 88% since I took it off the list. That's what happens, right? And what this is called is it's not even an overshoot and it's not a bubble. It's like a groundswell where all of a sudden everybody needs it now. So it's like this unnatural movement of demand. So I'm not moving these Drone Shield lines, but don't be surprised. And I did the same thing with Kraken. Don't be surprised if this stock just keeps going up and eventually comes back into this channel in the future once the major groundswell of demand simmers down. Okay? Same with Kraken, with what's going on with their batteries. You're seeing the groundswell where everybody wants these batteries now to build these massive fleets now of autonomous vehicles that we had none of before, and now we need a lot of. And what might happen is, let's say one kind of autonomous vehicle, we have 0, we need 100 of them, plus an extra 5 per year. Well, the first 100 is going to come fast, maybe 20 per year for 5 years. And then after that, you only need 5 per year. There's that groundswell. And in that groundswell, the stock will go well above its long-term trend lines, its long-term risk-reward lines, and blast off beyond there, and eventually coming back down. You don't want to be there when that 20 units drops to 5, right? But in the meantime, it just, some of the, look, we got out of Kraken here, and it is up, what, another 37% since then. I could see the same scenario happening here. You want to follow rules, you want to be cautious, but in the meantime, we're still not at the top line at all. And this is what I can envision. Talk to this with my mentor as well. Groundswell could push the stock well beyond, and we've actually had that already happen before, right? So if we were going up to here, I'm not going to move that because I'm going to move this back down. $4. Okay, is what we're talking about at those levels. My math is still here in terms of long-term risk reward, but the groundswell that we've got coming for 2026 and 2027 from these federal mandates tells us that we could have something much more significant occur. So keep an eye out for that. All right, I'll answer any questions in the queue, but it makes it a lot trickier, of course, in terms of figuring out what to do with your position at different points, how long you want to keep it maximum size, because these guys are like, they're not even operating on 10 cylinders. We got the 10-point rule, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 cylinders. It feels like these guys are operating on 12 cylinders now. It's like the old, older people know, Spinal Tap, the amplifier goes to 11. That's what's going on. It's the same thing that we saw here, though, with Drone Shield and Kraken, where long-term demand goes into 11 mode, okay? So, all good news, and congratulations to y'all who followed me when I said this is my largest AI holding. It remains my largest AI holding. All right, last thing before we go to Q&A, very quickly, AUKUS, you can look up this for yourself. I'm not going to spend much time on it, but very succinctly, basically we've got the Australian, UK, US partnership. All right, Australia wants us to make and sell submarines to them. That has been a problem because we can't make enough submarines for ourselves. But just a couple days ago, the Pentagon comes out backing a plan to sell submarines to Australia, which means this is the latest in a long line of news stories that we're hearing suggesting that General Dynamics is getting their act in order to get up to 2 Virginia-class submarines plus 1 Columbia-class submarine per every year as early as 2028. And as those of you who have seen my TPCS operating model know, I'm not even modeling for 3 in 2028 or 2029. But there is now a chance that they can get to 3. 2 of these and 1 of these. Not 1.3, not 0.6, but 2 and 1. And if those numbers come to fruition in 2028, we can change these numbers here. Oops. Yeah. And what you find is, right, this revenue number right here goes from 109 to 130. Okay? Big difference. And that would be huge for TPCS because that would take EPS. I'm going to show it to you one more time. Right? From the 109 revenue and the 193 EPS to more like 238 of EPS. So that story continues to evolve. Not major news, but hey, I'm here to give you the news every week. And that's what we've done. Let's go to Q&A. Let's see what you all have to... I'm sure after all this talk about submarines and rats, you guys want to talk about AI and see some charts. So we will do that right now. Anything you want to ask me until 3:55, I'm here donating time to you because my mentor donated his time to me, made me a millionaire. I continue to make y'all into millionaires. I keep hearing a new story. Roughly every month, somebody sends me another email or a text says, Mark, I just became a millionaire. Thank you. I love that. Please continue to do that every time. Every time. I consider myself a pretty tough dude, but every time I say made another millionaire, the thought of changing a life to making somebody into something that can have a nice free living, right? Not the kind of existence that a lot of people are forced into around the world. We live in a very great country that enables us the opportunity to go from being nobodies to living in basements, eating spaghetti every single day because we can't afford anything else, living off of $300 a month. That's what I was doing. To living in a penthouse in Miami Beach with a beautiful wife and a beautiful daughter and more money than we could ever spend. The mere thought of being able to enable one of you to become next always makes the hair stand on the ends of my arms. Let's see what you guys want to know to become that next millionaire. Let's see, we got the hellos. I will read all of these after, so keep them coming. I'm looking for the first question mark. If I skip your question, put it back in the queue because I can't catch them all. Sometimes I don't see it. Here's the first one. There's a lot of so-called industry experts out there. From your experience, how do you distinguish the legitimate experts from the talkers? Paul, great question. Okay. First of all, almost nobody on Wall Street is an industry expert. Yours truly is not an industry expert. I'm not an industry expert on maybe anything. I'm an expert on valuing companies. I'm an expert on finding industry experts to help me do that analysis. But outside of track and field, fantasy football, and Texas Hold'em, I probably don't consider myself expert level at anything. And in fact, I'm not expert level at Texas Hold'em either. Okay? To be an expert, you have to have multiple decades of experience being, working, making money, career level at that thing, specifically. Okay? I'm paying attention to football every single day of the year. It's like my hobby. Okay? So I know that Baltimore's defense is in shambles right now due to injuries, and it's going to improve, and their strength of schedule will improve. And so expect Baltimore's defense to not do such a bad job in the weeks ahead. Just as an example. That's what decades of spending every day doing something will do for you in terms of building expertise. Okay? That is what an industry expert is, my friend. Somebody who has done the specific thing that we're talking about for a living. If we're talking about a semiconductor stock, I want a semiconductor expert, somebody who actually maybe made semiconductors, designed semiconductors for a living for multiple years. Okay? That's an industry expert, not somebody at Morgan Stanley or Goldman Sachs putting out a report about a semiconductor stock. That is somebody who relies on experts. Trust me, I used to work for them. IDC, AMR, which got acquired by Gartner Group, the biggest technology experts on the planet, whose stock has gotten smoked because of AI, by the way. Okay? I think this is a good time to buy a little bit of Gartner, by the way, if you like larger caps. I do think I have some exposure to Gartner. You know, I don't even, now that I think about it, did I remember a couple weeks ago saying I was going to buy some Gartner or sell some puts on Gartner, and I don't know if I ended up doing that because the show ran past. Yeah, I did. I have some Gartner group. I got a little bit of IT. Just a little bit, you know. Those are industry experts. All right, let's keep going. And by the way, if you run into research from a real industry expert on something, pass it my way, please. Right? Hit me on Twitter. Tag me or something. I love seeing industry expert research. It helped us be winners on Crescendo. Basically any name, right? I look for industry expert research to validate that any company that I'm doing business with, any company that I'm investing in, like this company right here, Crescendo, the industry experts, Gartner via G2, Forrester via their Forrester Wave, came out and said, these are the guys. These guys are better than Microsoft and Cisco. And I was like, that's crazy. How can this little company be better than Microsoft or Cisco? Doesn't matter because the experts say it's true, so I'm going to trust the experts. I'm going to buy Crescendo stock. I'm going to make money. I'm going to make that next million. Listening to experts, not to Wall Street, not to somebody on Twitter. Experts. That is so key. All right, enough. I basically took a Q&A question and turned it into one of my sermons. Next question. Something more exciting. Let's see. Oh God, TPCS. I mean, we want to, can we get an AI question? That'd be more fun. Well, I'm going to keep it in order, y'all. Stay tuned. I'm sure there's going to be some nice technology AI questions. Given TPCS's ongoing, incomplete renegotiations of contracts like Stadco's 15-year Sikorsky deals, aren't you worried that the new CH-53K opportunities could bring more lower negative margin business? No, Sergio, because I've said this a million times. Put this in your notebook. I'm not going to hold it against you because I haven't seen your name before. So welcome, by the way. But they are the sole source for these parts. Okay. And could a new source be created out of thin air? No. Can a new source be created? Period. Yes. But I don't know who wants to do that because you're talking about relatively low margin businesses, but you have to create the product. You have to perfect the manufacturing and design process of these parts that TPCS did years and years and years ago. You have to spend millions of dollars just for the opportunity to maybe get business with Sikorsky. Not knowing if they're just tricking you into spending those millions just so that they can squeeze TPCS and then just pick them anyways. Okay? TPCS is in a good position. They said they've done a third of the work to get rid of all those bad contracts. So they're working through it. They're making progress, and until I see that progress stop, I'm not going to worry. There's your chart, by the way, on TPCS. Hey, look at how well that worked, right? We're doing great here, making money, following the rules, selling at the highs, buying at the lows. Do you think the IAM 837 strike at Boeing will affect TPCS since they are machinists that make the F-15 in St. Louis? From a timing perspective, it's possible, but I wouldn't worry about it, okay? Because there are lead times, right? Boeing doesn't want their suppliers to stop making things just because there's a strike going on. They want the supply chain to continue to roll on, because if and when they figure this strike out, which they will, right? They're going to bring people back and they say, now we want you guys to work Saturdays and Sundays to catch up to what you missed. Don't worry about minutia like that. As long as these programs are important to the United States of America, it's going to be beneficial for TPCS no matter what happens in the meantime. And this is where I keep telling y'all, don't overthink things. Don't overthink things. Don't overthink things. Because what ends up happening is you get scared out of a position. Trust me, it still happens to me. You get scared out of a position over something that is relatively minor in the grand scheme of things, and then you don't get back in and the stock takes off and you missed a great opportunity by not just riding out the little bumps along the way, right? People asking me about the shutdown. People who sold their entire portfolios and even went short, they're out there losing money. Maybe never get this opportunity again because they were afraid of a shutdown. Well done. Nice job overthinking things. Nice job watching CNBC, which trains you to overthink things. It only comes down to one thing. One thing. Risk and reward. Not shutdowns, not strikes, not this, not that. Risk and reward. Long-term lines of risk and reward. This is your long-term risk reward chart for TPCS. This is where we are in that channel. Okay? We are seeing a continued movement towards operating on all cylinders, progress towards operating on all cylinders, and we know that this is where the stock belongs if and when they reach operating on all cylinders. So as long as they're making progress towards operating on all cylinders, la 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 la, I don't hear the rest. Okay? This is why Warren Buffett became the richest man on earth, because he did la 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 like nobody's business. He did la 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 way better than I ever will. And he became the richest man on earth. I probably will not, because I wasn't and am not and probably will not be as good as him at doing the la la la. Let's keep going here. We need to find a question that's going to keep this audience. I mean, we're going to fall asleep here. CTLP is at 1060. With a buyout at 1120, you get a return of 5.5. In your opinion, is the risk still worth taking after the delay? I've answered that question before, Christian. Yeah, I think so. I'm only not going to yell at you because I haven't seen your name before. But y'all, pen, notebook, write the answer to these questions down. If something changes, I will tell you. Otherwise, don't come on here and say, did anything change? Did anything change with ABC? Did anything change with DEF? Did anything change with GHI? Did anything change with G? Do you see how annoying that is? I could do that with the whole alphabet. And you'll be like, that's annoying. And then you'll know how I feel. When y'all come on here, and every week there's somebody, is there something new with? If there's something, every week I come here and tell you what's new. I give you everything. Everything. Everything in my notebook. Everything in my tabs. Everything that I know sucked out of my soul onto this show for 2 hours. You don't need to ask me for anything else. Swiggity Pig Fig wants to know when the first dummy will get called out. Me too. Hopefully none. You guys have done a great job. I'm really proud of y'all. I'm like really proud of y'all. Like you guys as a group are definitely making strides towards becoming millionaires. Making strides towards making $1 million per year. Because I can tell that y'all are listening. That y'all are writing things down. That you're doing what it takes to be a millionaire. You're acting like millionaires before becoming millionaires, and therefore you are prepared to be a millionaire when you get there. You need to do it now, not in the future. It's beautiful. I love to see it. How's that? How much do you trust Nest Management? I already asked that. Answer that. What do you think of the amended terms of the Indonesian mapping RFP? Now, that's a great question. I think I answered this last week, but in case not, I think it's fine, right? Like, Indonesia has to be careful, make sure they do business with the right people, make sure that they cross their T's and dot their I's, right? And I am convinced that Intermap did that round of funding that they recently did. There's the chart. We zoom it out more, actually, more ITMSF. That's where you'll get these lines in here. There's your risk reward lines. I think that's why they raised money, to satisfy the viability requirements of Indonesia to get the massive deal. They already got the $20 million deal, but now they got like $200 million, right? And they got to prove themselves, their financial viability more. You can't, I'm going to tell you, for you budding entrepreneurs, you will not be able to go to a massive supplier or customer and win business with them without showing viability. It is the most underrated thing for a business. Because if somebody big does business with somebody small and that somebody small goes out of business, that somebody big looks bad. The project blows up, and then somebody says, why did you do business with a company that had the potential to go bankrupt? Well, I don't know. Well, you're fired. That's real. That really happens in the world. Okay? So they got to make sure the balance sheet's strong, that the company is strong, that a bankruptcy will not occur. And I think that's what happened here. On Gatekeeper, I noticed the MDC count has increased 10% since the official news release for Long Island. Do you see MDCs as a no-brainer add-on for customers as the FRA mandate is fulfilled? Yes. Short answer, yes. These are mobile data collectors. It enables, it's part of this Nintendo thing that I told you about that enables all the additional software cartridges to be created so that you can get more value out of the installation of this hardware. Yes. And how much do you think might contribute to your 10-cent EPS target? I can't detail that off the top of my head, but obviously it's positive, right? Because where is their margins right now? Let me see. Where do I want to do this? We'll bring this up real quick. By the way, I love this website, Ticker. It's great. I'm in here every single day. If you see the margins, gross margins, 45%, okay? Those margins should tick up nicely over time because the MDCs, the mobile data collectors, enable these AI services, and the AI services have margins, incremental gross margins of something closer to 90+%. Okay? So you only need half the revenue to drive the same amount of gross profits. All right. Looking for the next question. Will they create an AI money mark? I would not be surprised. There are enough people on Twitter and StockTwits making fake accounts of me. Be careful, y'all. There's people making fake accounts of me and then trying to get you to sign up for some service. This is why I tell you every single week, I will never ask for you to sign up to any service. Okay? I may someday ask you to contribute to a charity, but I will do that live here. Okay? Me to you, my face to yours. I will never ask you for money anywhere except here. And that money will only be donations to charity, never for any services. Ever, ever, ever. Right? And that takes care of the doppelgangers. Love what you do. Curious how long you intend to do this for. I don't know. As long as y'all keep coming, as long as millionaires keep being made, and as long as I feel great energy from doing it, and I do. There was a period of time where I wasn't coming live every week. Okay? And now I do every single week, and I actually look forward to it. So until I don't look forward to it, or I don't feel appreciated, if you guys don't share the invites, don't retweet my invites, that's all I'm asking is for you to spread the word. You know how much this subscription would cost to a product like this? I was making 7 figures a year for a product like this. I used to charge Wall Street firms $5,000 a month just to be on my email list. $5,000 per month. Okay? And I give you all this for free. And all I ask is the thumbs up and to share, retweet my tweets to let more people know. Just spread the word. That's it. If I get to the point where I feel like most of y'all just aren't doing that and just want to come and suck me for information with no appreciation, listen, appreciation, I'm sorry, that's my payment. You understand? I love seeing people become millionaires and then come here and say, Mark, thank you for changing my life. If that happens every month for the rest of my life, I'm going to be here every month for the rest of my life continuing to do this, as long as I am able. Do you think this AI-generated movies will improve margins for content? Hell yes. 100%. I mean, it does not cost $20 million to create a Tilly Norwood. Tilly Norwood did not cost $20 million to create, but Chris Hemsworth cost $20 million for every single movie. Tilly Norwood will not cost $20 million per movie. Okay? So to create these actors that charge $0 to act, it's a no-brainer. It's an absolute no-brainer. It's going to improve margins for the content, right? Or the opposite, it will lower the prices that they charge for the content. So maybe they'll maintain their margins, but they will give us greater accessibility. Who knows? Maybe we'll be able to go to the movie theater for $5 again at some point to see blockbusters. Okay? A public company is buying another company in an all-stock deal for $90. The company being acquired is still trading for $30 a share. Both companies are in the Bitcoin treasury space. What would your recommendation be? Stay away. Don't fall for these things. Okay? I think CTLP is risky enough as it is, but it's really well. I've known CTLP for 10 years, so I'm willing to take that acquisition arb risk. Okay? But when you hear about this, a gap like that, that's a problem. Most of the time it ends badly, right? Y'all remember Spirit Airlines? That's how it ended for people who thought that, oh, there's a big acquisition, No, my friends. There's always a reason why. There's always a risk reward associated with something. If it seems too good to be true, you better find out why, right? Coming from one of the masters of too good to be true, when I gave y'all Kraken, seems too good to be true, but I could tell you why it seemed too good to be true and why it was actually true. Because I had industry experts on my side telling me, yeah, this is real. And Wall Street just doesn't know that yet. That's what we look for when Wall Street doesn't understand something. But a lot of times, something like what you're talking about, Rice, is probably something that people already know about. It's well known, and it's being picked over. And that means that the risk reward of the situation is probably 50-50. Relative to the opportunity. And I'm not here to flip coins, and neither should you. You do not become a millionaire flipping coins. Stay away from stuff like that. And by the way, Rice, thank you for not naming the stock on my show. You did that beautifully. This is what I'm talking about, man. Like Rice was the dude that I would yell at maybe every other week, and now he's like military grade. Love it. I love it. This is professionalism. This is professional. This is called discipline. This is how you make million. Rice, tell me you ain't making money this year. I guarantee Rice is making money this year. Guarantee it. Because this is the kind of attitude that leads to making money. The discipline it takes to making money. You can't just do this willy-nilly. Oh yeah, it's easy to make money. Yeah, it's easy to make money now. Watch what happens to your money when the market tanks if you don't have discipline. Watch. You want to find out the hard way. You'll be here 3 or 4 years from now with the same money you've got right now going, damn, I should have listened to Money Mark. I could have saved myself 4 years trying to get back to where I was. Adding 4 years until you get to retire. Adding 4 years until you can buy a penthouse. 4 years of your life. It's like prison, honestly. You're sentencing yourself to 4 more years living how you are instead of how you dream of being. And taking that 4 years away from living that dream. It sickens me, okay? Because I did it to myself. I lived in poverty longer than I had to if I just listened to my mentor. Years. Don't be stupid. As IWM gets closer to the red line, should we increase our hedge? Ben, that's a great question, and the answer is yes. All right? As we get into riskier situations for the market, you should increase your hedges against the market. Or the alternative, right, is if you're taking profits on your name, like we took our profits on Kraken, we took our profits on Drone Shield. That automatically, all else being equal, right? If I sold $1 million worth of Kraken, now I don't need a hedge on Kraken, right? So typically, if I have $1 million in Kraken, I might buy 200,000 of RWM as a hedge, or short 200,000 of IWM as a hedge. You know, I'm roughly 20% hedged right now. But if I sell that $1 million, then I sell the hedge too. So I actually become less hedged, even though part of the reason that I ended up selling Kraken is because the market was moving up and Kraken moved up with it, right? So one of two things happens is that you follow the rules and take profits, you know, selling these stocks when we get to the red line, or and then that takes care of itself. Or yes, you put on more hedge. Chartorama on CXDO, we already did that, but just in case. Chartorama, anybody have any charts you want to see? We got 20 minutes left in Q&A. How do I say Gatekeeper chart red line should go up without saying that? Yeah. No, it is a question because you put a question mark on it, bro. Don't do that to me. And no, the red line should not move up. These are long-term risk-reward lines. Long-term risk-reward lines. They can be breached to the upside. There can be things that cause them to justifiably push up beyond the red line. Saw it here with Crescendo, for example, right? When you have a groundswell of demand, into which, by the way, there will be an increasing odds of acquisition. So while you want to, you know, like Drone Shield, I'm down to 0, by the way, right? I announced this week in one of my forums somewhere on the internet. I know I said somewhere. I wanted to remind myself to say it here. I no longer own any shares of Drone Shield, okay? But when we got to the top line, that was not necessarily a sign to sell all, right? Because it's a 10-point scale, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. There's no 0. But when we get way up here, well, yeah, that's kind of 0. We're in rarefied, atmosphere. The oxygen's getting thin. This is 0. This is the vacuum of space. The stock is actually broken out of the atmosphere and gone into the vacuum of space. And I got to the point where I said, you know what? I don't have enough industry experts. I don't have enough expertise. I don't have enough for me to continue to hold any more shares of Drone Shield. And boom, that's it. The last of my Drone Shield is now gone, right? But it was great to hold on to Drone Shield. For those of you who held some more Drone Shield, 71% extra return for the shares that you kept because of the groundswell of demand that takes the stock beyond its long-term risk-reward lines, okay? just in case you didn't hear it earlier in the show. Air, the options are pricing in an 18% move, but the average move is 19%. The risk reward as high as 50. Since a 5-point move up and down is priced in, would you be adding if the earnings are clean? Would I be adding to my shares of Air if the earnings are clean? You're overthinking things, my friend. You're doing it again. Y'all are doing it again. Overthinking things. If the earnings are clean, the stock is going to instantly respond to the earnings being clean and instantly price in that news. At which point, there's nothing new to do. Now, if the earnings are way more than clean, game-changing, proof that they're operating on all 10 cylinders, which they're not. They look like they're operating on 10 cylinders. Okay? Because of everything we see going on, the movement is there. It's moving towards operating on 10 cylinders, but we don't see the HBM deals. We don't see the DRAM deals. There are a lot of a lot of the deals that we see are for the acquisition that they made, not for their Fox XP product. Okay? Which is the higher priced units. There's a lot more that can be done here. There's a lot more that can be better here. Okay? That's not to say I don't want to own AHR. I have exposure to AHR. But we have had, since we hit the green line, hashtag follow the rules, the stock has run from 10 to 30. And actually from 6 to 31. That is a long run towards the 10 line for a company that is not operating on all 10 cylinders yet. Feels like it's moving in that direction, but the stock is moving really rapidly. Look, if this line continues, it will get all the way to the top of the trend line in 6 months. Do I think they will be operating on all 10 cylinders in 6 months? It's possible. It's possible. So this could continue, but come on now. Just think things through very calmly. How many cylinders are they operating on? Where is the chart in the risk reward channel? Simple. Keep it simple. None of this if the earnings are clean. BS. That's BS. Do you have any concerns about Gatekeeper being able to deliver on so many deals since they are a small company? Are they hiring a ton, expanding, etc.? Yeah, I'm not worried. I'm not worried about them. CEO's not worried. I'm not worried. It's a great question, though. It's critical. But I'll tell you this. There are worse things that could happen than them getting more business than they can possibly handle. Right? If that is our consolation prize, that Gatekeeper got more business than they could handle, then we're in a very nice position, my friends. The MTA has outlined spending for the 2,000 new train cars yet to be purchased in its proposed capital plan. Yeah, this is a groundswell. This is something that's happening everywhere. We're seeing new trains, new buses, new school buses, electrification. So, they're, creating electric fleets. A lot of these things, buses need to be turned over like every 6 to 10 years. So the new buses, they're making them electric, increasingly EVs, increasingly outfitted with these monitoring equipment. And so this is now happening more and more. Okay, with these existing buses, that actually creates a delay. Because why should we put these cameras and all this infrastructure on a bus that we're going to retire in a year? So what they do is when they retire the bus, then they get the equipment and it goes on the new buses. So this is good. This is now happening. We have the momentum where the old buses are being retired in favor of new buses, and this is an example of the comment that you made there. GeoDrill chart, if I haven't shown it already. There it is. Joel finally sold all his drone shield. Welcome to the club. Mark, for SNES, if they've been raising money for some kind of major ramp up or expansion, would that make you reconsider your thoughts on them? No. No, it would reconsider my thoughts on them if they told the truth about that. If they said we might need to raise more money to get from here to there. They made it pretty clear that they don't need to raise more money to get from here to there. So why are they raising more money at $4 or $5 when they have a stock that could go to 40 or 50 if they have all the money they need to get there? Don't trust them hoes. I understand being upset with SNES management, but you always say never listen to management and find other sources. Why does lying then matter so much? No, 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 no. There's a difference, Mr. B. You're absolutely right. You don't rely on management for your information. You get information from management and then you go into the marketplace and verify it. But management, make no mistake, is not allowed to lie to you about things like this. And it's very specific because management will, most management teams are not going to tell you, yeah, we're going to do a raise. Okay? That's fine. Right? Or not answer the question. And I can give that a pass because they're not going to telegraph that. Right? So SNES, cool if you're not going to telegraph it. But don't accentuate it. Don't make it clear. No, we're not going to raise any money. No, it's so bad. No, like swearing up and down. Right? Methinks thou protest too much. And when you do that, that's when you cross the line from fiduciary duty to douchiary duty. They, to me, did something douchey. I'm not happy with them. I'm not happy. They could have just said, you know, opportunistically, we're going to continue to keep our eyes in the marketplace. We think we've got enough money to do what we need, but we want to remain open-minded to things in case we see other opportunities arise. That's not what they did. And I'm not cool with it. So they're going to have to get themselves out of the doghouse. Simple. Better safe than sorry, especially with a speculative wait time stock in the midst of a yellow alert. Who does business with H.C. Wainwright? Boom. Yellow flag after yellow flag after yellow flag. How many yellow flags do you need? Now, picky, picky, picky. Hashtag picky, picky, picky. Last week you said there would be a new official pick this week. No, I didn't. I said there might be. Okay? And I'm saying it might be next week. We are a lot closer. I will tell you that, a lot closer. Could I have made it an official pick this week? Probably. But it would have been sloppy, and I don't want to be sloppy. So an extra week, maybe 2 if necessary, but it feels like next week is the week for the new official pick. Is it true that Money Mark was the 4th Beastie Boy? Don't do that. That's unprofessional, Jimmy. Don't put a question mark. Don't make me say something. I see the question mark. I read it. I didn't read it before saying it, right? You just wasted everybody's time because you think you're funny. Is Mark the 4th Beastie Boy? Way to be professional. Hello, Mark. I know you've talked about California Nanotech in the past. Have you had a chance to look at their latest military brakes deal? Nah. Too speculative. And more importantly, there's nothing wrong with asking me about them. But I couldn't find enough industry expertise, and so I passed on it. I'm glad I did. I haven't looked at this chart in a while. Okay? There's the American version. I mean, if you've done your research, if you feel great about it, if you found industry experts, you know, if there's ever a time to own California Nanotech, it might be here because we're at the lower end of this channel. This is not risk reward, by the way. These are gray lines. You know what that means if you read the article and watched the video, as I tell you to do. If you don't, then F you. I don't care. I'm not going to teach you. Since you don't care enough about yourself to do that. But yeah, I can't pick a stock if I can't get the expertise needed to check all the boxes. So it's nothing against the company, nothing against the stock. I'm not saying I'm bearish. I just can't be bullish because I can't check the boxes. There's your IDN chart. Unrelated question. Do you think David Montgomery? No, don't do that, Timothy. See, we're talking about stocks. I give you examples, right, in here, but stay professional, stay focused on stocks. We got limited time here, and we just wasted 2 minutes, right? I got 7 minutes left, and somebody with a good question is not going to get an answer to that question because you want to know if David Montgomery is going to get 70 yards this week. It's so funny. Is Mike the fourth Beastie Boy? And who knows? Maybe that question that doesn't get answered is a question that would help you get one step closer to being a millionaire. And you just screwed yourself. Thank you. On behalf of the 300 plus people watching this, on behalf of the 4,000 people who watch this show every week, thank you. Thank you for wasting people's time. Since I can't give the dummy treatment, for a dumb question, I'll do it for a dumb comment. A good waste of our people's time. You see this, the heart emojis and the party emojis going up right now? That is for you dumbasses asking dumbass questions, thinking you're funny, wasting time on this show. Don't do it again. Don't do it. I'm keeping track of your names. Wolf finalized their bankruptcy Monday. Stock went under 2 to 34 hours. Why? Ask AI. Ask AI that question. I'm not following Wolf Speed closely enough on that. But for those of you who took a flyer on it, congratulations. I told you the industry expert liked the story, but they end up in bankruptcy anyways. But you see what happens to the stock. That's what happens sometimes. Look at that. Woo-hoo-hoo-hoo. Crazy. Crazy, crazy, crazy. Sometimes you win for the wrong reason. It's really what it comes down to. And when you have industry experts on your side, it's worth taking the bet. And the industry expert, I came here and told you when the stock was 2, I think. 2 or 1 something. Right? That the industry expert had turned positive on Wolf Speed, and now look at it. Wow. Do you still track Genesis? Not really. Enough has gone wrong with that story that I'm not, it's just issue after issue after issue with these guys. There's always some excuse with these guys. It might work out, okay? And if there's a time to buy Genesis, it's now because it's close to the green line. I just don't see myself coming back to it because I just don't have enough industry experts and expertise in this area. I had enough at the time, but given the yellow flags that they've given us, that takes enough of the check boxes off to drop them down. I just don't know if I'm going to cover them again in the future. I wish them luck, though. I think it's a decent company. I really do. 4 more minutes. Let's go to the lightning round. Is Gatekeeper's balance sheet strong enough to absorb a $100 million contract? No problem. How should a CEO handle telling shareholders about the need for future raises? Exactly the way that I explained it, right? You tell them you got to, at this time we don't plan on raising more money, but we're going to keep our minds open because as events unfold, we have to remain open-minded to being able to take advantage of opportunities. Okay? I don't feel like that's what they did. And maybe I'm over-exaggerating things. I mean, I'm still bullish on the opportunity. You know what I'm saying? I just don't like that they continue to raise money in our faces when they seemed to make it seem like they weren't going to do that. They just kept doing it. They didn't stop. They didn't even take a pause, as far as I can tell. They spent the last 3 months raising another $2 million. No es bueno to me. At least if they had taken a pause, then I would have been, all right. What valuation methods do you use to get risk-reward lines for indices? Are they purely technical? They're purely technical, but with an index, you're talking about like the Russell 2000 is 2,000 stocks. 2,000 stocks as a whole is pretty easy to see the trend because it's not an individual. An individual stock can have much more volatility than an index of 2,000, right? That's the short answer there. But yes, pretty much pretty much technical, but technical and fundamental for an index tends to be the same when you have a sample size of 500 in the S&P 500 or 2,000 in the Russell 2000. Amplitude, since it's closed out from the unofficial pick, should we think of it as an inferior pick compared to the other unofficial picks? Yeah, dude. Like, if I take them off the list, then it's obviously inferior. I do not own a share of Amplitude anymore. I'm being more and more disciplined, by the way. I own a fewer number of stocks. My portfolio continues to grow, get bigger and bigger. New all-time high today. Another one, right? But I have fewer stocks because I get rid of the Amplitude. I get rid of maybe the SNES. I don't know if I got rid of all my SNES or if I kept some, right? But as I get rid of names that are like, not good enough, not good enough, not good enough, because as the market gets higher and higher and higher, the bar that you need to hurdle for me to want to continue holding your stock gets higher and higher and higher. And then I look at a stock and I say, do I really want to hold this stock with the market so close to a yellow alert across all indices? And the answer increasingly becomes no. And those names get thrown out. Still have my favorites. Still holding those monster, the great names. But I'm getting rid of all the questionable ones, All right, let's see. One more minute of lightning round. Who's making money off of Tilly Norwood? Ask AI. Do you think there could be a potential bidding war for DC Universe by putting big streaming firms due to AI potential? Yes. Air reports earnings on Monday. Do you think they had a good quarter? I don't know. Too difficult to call quarters on air. Could you explain why you didn't have a bunch of official picks in April following the pullback? Yeah, because I don't pick stocks on the basis of where the stock market is. I pick stocks on the basis of where the stock is. And when I find a great stock is when I find a great stock. I can't force the process. I don't go, jumping into a bunch of names just because the market pulls back. Nope. I find a winner when I find a winner. And like I've told you, I tend to spend 100 hours minimum on each official pick, right? So if the market tanks, right, it's still going to take me 100 hours to find a winner. 100 hours, if I spend 30 hours a week or 25 hours a week on research, that's a month to find a winner. And in fact, by the way, the last 13 months, I have about 13 picks. That's shouldn't be a surprise. That's the math. It takes me about a month of work to find a new pick, right? So I can't just all of a sudden find new picks all of a sudden just because the market tanks. It's a fair question. Could you explain why? Oh yeah, they already. Are Opera and KRMD still in play? I didn't say I don't like them, but I don't own Opera anymore because the market kept going higher, and that's one of those names where high market cap. We made some money, and I mean, I'm not mad at it if you continue to own the stock. I think there's nothing wrong with owning Opera. It's been doing great. Right? But I'm getting picky, more and more picky. Steve, NBIS, you haven't watched my show. If you've asked that, asking that question tells me you haven't watched my show recently, so I'm not answering it. Is it okay to ask, have you added any AI stocks to your personal portfolio this week? No, that's not okay to ask. Don't ask me about personal things, but I do come in here, right? The last 2 weeks, I came in here and gave you like basically every stock that I own in my personal portfolio, whether it's an official pick, unofficial pick, or not at all, right? Stay tuned maybe next week with an official pick. I'll give you some more picks that I've put money into, right? This week I didn't have anything new for you as far as that goes, but that's how it works sometimes. We've gone a little over, but it's still 357. That's cool. Hope you've enjoyed this. Give me the thumbs up. Come back next week. Tell other people to come with you, because that's what keeps me coming back every week, every Friday. Money Mark, Stock Talk Live. Have a great weekend. Take care. We answered all the questions. We got through all the Q&A. I was happy to do that. especially given these boneheads asking these bonehead questions. Don't do that, guys. Stay professional. All right? The show's entertaining enough as it is. You don't need to know how many yards David Montgomery is going to get this week. Let's see what we got here.